In this video, I want to walk you through how to set up the star strategy on your TradeLocker account. So the first thing you want to do is you want to set up your EMAs. So that FX is for indicators. So you tap on that and then you search in the search bar, just type EMA. So you see moving average exponential. So tap on it 3 times. Make sure you don't tap on it more than 3 times. 1, 2, 3. So when I close this, you see that I have 3 EMAs that have shown up on my chart. Okay, so now we start to edit the settings for each of them. So I tap on the first one, EMA, the first one on top. When you tap on it, you should see 3 dots. So when you tap on those dots, it will bring up settings. So click on settings. And so for this one, we want to set as EMA 20. EMA 20. So we come to inputs here, and we have 20. Okay, where you have smoothing line, you change that from SMA to EMA. I usually just leave the smoothing length as 9, but some people choose to do 5. The difference is not, I haven't noticed what the difference is. So I click OK. Oh, okay, there's one more thing. We want to adjust the color. So I go back to the settings for the first one. So you decide what color you want to use for your EMA 20. So when you come to style, it allows you to adjust the color. So here, this is where you choose what color you want to use. For my EMA 20, I usually like to use white. And then I will also increase the thickness. This is where you have thickness. So depending on your preference, usually for the EMAs, I use the second or the third one. So I'll leave it as the first one. So what you'll see now is it added the white EMA to my chart. Yeah, that's the 20. So that's my 20 EMA. So next I want to do the same for 99 and then for 200, and then I'll come back to explain further. So let's quickly do it for the 99. We come to inputs where you have length. The length we want is 99. The smoothing line we change from SMA to EMA. The smoothing length, like I said, I often leave it as 9, but change to 5. Then style. For me, for the EMA 99, I usually like to use yellow. I use yellow for my EMA 99, the bright yellow. And then I increase the thickness and then okay. So you see now I have the white, I have the yellow already set. So what I want to do now is to set my 200 EMA. Same thing, same process. Come to inputs, 200. Smoothing line we change to EMA. Smoothing length I change to 5. And then for the style, I'm going to use purple. I usually like to use, purple or pink, but I'll make it bold. Or whatever color we call this. Is that pink? Okay. So that's it. I usually will make my 200 kind of bolder. You see, because the role your 200 EMA plays is very significant. And I think at this point I should just, try to talk about the EMAs. This is on the daily time frame. Okay, this is on the 15-minute time frame. You see, whenever price is above, so generally whenever we are in an uptrend, meaning whenever price is going up, you would find that the 20 EMA usually would carry the price. But sometimes you will get a bounce off off of the 99 EMA. So that my yellow line is the 99. So can you see how in this upward move, starting from here, you see price came above, and you see the white line, which is the 20 EMA, carried it, but usually would bounce off the 99. You see that? It pierced it again, bounced off. So those were opportune moments for you to take a buy. Okay, so this is the benefit of the EMA strategy. Now, whenever you find price above the 200 EMA, which is the purple line, okay, whenever price is above the 200 EMA, the market is bullish, meaning we are usually in an uptrend. Um, let's look for where we had price below, and you will need to observe this on different time frames, to understand how price reacts with these EMAs. Whenever price starts trending down, whenever we enter a downtrend, you will see that price will fall below the 200 EMA. So when you see that happen, you already know that we're in a downtrend. So you're looking for sells. When price is below the 200 EMA, you're looking for sells. When price is above the 200 EMA, we're looking for buys. Sometimes we are in a ranging market where price is just going sideways. Okay, so look here now. You see that we fell below the 200 EMA. Okay, can you see? We fell below the 200 EMA. You see that? So, so in general, this is how it works. The 20 EMA often carries the trend. So in an uptrend, it carries it. In a downtrend, it carries it. Um, the 200 EMA, if it's above, we're looking for buys. If it's below, we're looking for sells. Many times you would find on the lower time frame. So if I come to the 1 minute time frame or the 5 minute time frame, usually you will see the trend starting to change first on the lower time frames. Okay, but we want to talk about the star strategy and how to implement the star strategy. So it's not only these EMAs, we're also going to add the moving average, the moving averages. So what I use for the moving averages, we come back to indicators and I'll type MA. So I'm interested in this cross, the MA cross, not MA with EMA, but the MA cross. So just tap on that once. Okay. And good. So now we come and adjust the settings for the MA cross. This is the MA cross. So when you tap on it, go to the settings. So under inputs, for the short, we'll put 5. So that's our 5 EMA. For the long, we'll put 25. That's our 25. Sorry, MA, not EMA this time. So under style, I'll maintain color green for my 5 EMA, but I will use the third thickness because I want it to be pronounced on my chart. Okay. Then I'm going to come for the long one, which is my 25 EMA. I use red. So for me, green, green is buy, red is sell. Green is buy, red is sell. So I'm using the third one as well. Now, the reason why I use this MA cross is because, okay, and then for my cross, I want white. So you're going to see the benefit of using the MA cross. You see, whenever those moving averages cross over, which is what we refer to as the star strategy, yeah? Whenever you have the cross, you would usually see a white cross on your chart. So how do we now implement this? How do we use this to trade in practice? In practice, whenever you have your green and your red, whenever you have them cross, and you have your green crossing to the upside. So market has been ranging here. So let's because it's not every time you can use it, but good. If you look here, there's a candle covering this cross here. This big fat candle is covering our cross here. But we have a cross here. If you notice, the green came up. You have an intersection of the green. Okay, just for clarity purposes, I'm going to, because this may be looking too noisy for you. So I'm going to hide my EMA 99 just for the purpose of explaining in this video, and I will hide the 200. I'll still put them back. Okay, but the star strategy is essentially this. You see here, we have an intersection of all the three, the white line, the green line, and the red line. Okay, so this is what is usually referred to as the star. But with the moving average cross, usually you see a cross will form, a cross will appear. So whenever you have the cross appear and your green is moving to the upside together with your white line, you're taking a buy. So can you see what happened here? Can you see price was at 3115 and price came all the way to, that's 150 pips. That's 150 pips. That was a huge move. So you could have just quickly taken a buy there. The moment you were in profit, the moment your trade entered profit, I would use this strategy defensively. So you're either just taking a few pips, 30, 40 pips, 50 pips, and you're closing, or the moment your trade is in profit, move your stop loss to entry. Protect, break even, meaning that if price should reverse, you don't lose anything. That's the way I would use this star strategy if I was using it. So we are currently on the 15-minute time frame. I do not recommend using the star strategy on the 1 minute or the 5 minute. If you want to use it on the 10-minute time frame, on the 15-minute time frame, but never less than the 10 minutes. Okay, so good. Look here, we just had a star. We just had a star appear on the. I just changed to the 10-minute time frame. Okay, so do you see that the cross happened here? The cross appeared and we had the star. We have green going to the upside. We have the white line also crossing to the upside. And do you see price went up? So price went up from, let's say from this area, 3119, and it came as high as 24. You see? So 30, 40, 50 pips and you're out. Defensive trading, 30, 40, 50 pips and you're out. That's how you're going to use the star strategy. Okay, let's look for other opportunities where we had. Okay, now this was an opportunity for a sell. Do you see we had the cross? But when the cross happened, where were the, what should we take note of? Do you see the red line is on top? The red line crossed to the upside. The green came down. The white was coming down. That's telling you that price is going to come down. So you could have taken a sell. If you are taking a sell here, 3124, look how low we came. That's almost 100. That's more than 100 pips, as a matter of fact. So, but you don't have to ride it the entire move. The only reason why you want to ride the entire move is once you're in profit, you can decide to move your stop loss to entry, and then you can trail. You can use a trail stop. There's another video that shows you how to do a trail stop. Let's look for another example of where we had a cross on the 10. Okay, good. So we have one here. Okay, it's the big fat candle is covering it, but you see that right here, there's a cross behind that fat candle. So if you had entered there, that was a huge move. So we have our green EMA, which is the MA5 crossing to the upside. You have the white one also tilting towards the upside, right? So at that point, once you have that, you then make your entry and look at the move that we had. Okay, but I would recommend that whenever you are taking this strategy, because no matter what strategy you are using, you cannot throw away risk management. This is my recommendation now. Okay. So what you want to do is, if you want to back test this strategy to say, okay, anytime these crosses happened and there were reversals, by how many pips? So if we look here, okay, the cross happened here, 3115. A good stop loss would have just been below, so you can use a 30 pip stop loss. So if you entered at 3115, 3112, or 3111, use a 30 or a 40 pip stop loss. In my opinion, you should always use a stop loss. This is my opinion. You see, if you any strategy that you learn that doesn't allow you to become a disciplined trader is not working in your interest. You want to adopt the habits. You see, in trading, the habits are more important than the money. Because ultimately, no matter how good your strategy is, if you have the best strategy in the world, but you haven't learned to become a disciplined trader, you will be having, it will be feast and famine. Profit, huge losses. You don't want that. You want small losses, sometimes small profit, sometimes no profit, sometimes big profit. But you never want to incur huge losses. Only reckless and careless traders incur huge losses. It's reckless to do that. It's reckless to do that. So always use a stop loss, even if you're using this star strategy. Okay? And it's not accurate every time, but the win rate is pretty good. The win rate is pretty good. On the 10 minutes, 15-minute time frame, is pretty good. Sometimes you may not get the big move that you want. Sometimes you may not get such a very big move, but the win rate is pretty good. So this is how you set up your star strategy. Okay. Okay. So we have another cross here. Okay, good. Now, just look at this example, showing you the importance of why you should use a stop loss. Okay, we had our cross up. We had I'm addressing this one. We had a cross there. Okay, if you are taking the buy, yes, you made some good money, but you see, it was just two candles, and we had a reversal, huge reversal, and then price began to sell. So if you didn't get out of the trade on time, you would have now been stuck in the sell. And look, the sell came all the way down. So no matter what happens, use your stop loss. No matter what happens, please always use your stop loss. This strategy requires, a lot of attention. Okay, so don't just do it and walk away, except you've already put all your stop losses and take profits in place. So I hope this helps. I hope this helps. This is my version of how you use the star strategy. If you have any questions, please drop it in the comments, like and subscribe. Share this with somebody who is trying to make money from the financial market. This is very simple for anyone to implement. It's simple, it's beginner friendly. Um, but by all means, don't just stay here. Start to learn, start to understand candle patterns. Learn the language of the charts, learn support and resistance, learn price action, the candle patterns, because those would also let you know when reversals are happening. Learn to identify the trend. Are we in a strong uptrend? Are we in a downtrend? So don't just stay here with this and say, oh, I found my meal ticket. No, learn the language of the charts. This is Coach Josh signing out. Thank you. God bless.